If you have all your money in the bank, or you plan on keeping a lot of money in the bank, then this video is for you. In this video, I'll share with you today why you shouldn't keep all your money in the bank. I want you to have a mindset shift from thinking the banks are a safe place to keep all your money. There are other places where you can keep your money and earn interest. Please watch this video to the very end to help you make an informed decision about the safety of your money. Money kept in a bank is a liability. From today, I want you to start looking at the money you have deposited in the bank as a loan to the bank. When a loan is given, there are two things that should be guaranteed. The first thing is it going to be paid back? And the second thing is, at what interest will it be paid back? With banks closing so often, you should think about the likelihood of the bank not being able to give you back your money. And secondly, you should also consider how much the banks will give you as interest because they are using your money. From my perspective, keeping lots of money in the bank is a liability. A liability is something that takes money from you, while an asset is something that adds money to you. In case we are meeting for the very first time, thank you for stopping on my channel today. I'm Charity with Boss HisMoney, bringing you tips on managing finances God's way and living a holistic life. If that resonates with you, please consider subscribing by hitting the red button below. For my bosses, welcome back and thank you so much for your support. Money in the bank loses value through inflation. Instead of putting money in the bank, you can buy treasury bills. If you want to know more about treasury bills or any of those bills, you can leave me a comment below. Then I can further talk about them. With treasury bills, you are assured of getting your money back because the bank will print that money and you will get your money with interest, even if it's not that high. Inflation is on the high right now at the rate of 4.93%, which is higher than the long-term average of 3.28%. This means the prices of goods and services keep going high at that rate. In the meantime, the banks give less than 1% interest for the money you are keeping with them. I know you can do the math. The banks practice fractional reserve banking, where they are required to keep only a certain percentage of your savings on hand, and the rest they lend to customers at the rate of 2 to 20% depending on the loan or credit card that those customers get. This means when you open an account at a bank, in the contract you sign, you agree to allow the bank to use a percentage of your deposits as loans to other bank customers, which is normally around 90 to 100% of your deposits. If you have $1,000 in your savings account, the bank will lend $900 or the whole $1,000 to another customer. This doesn't mean that you have no access to the money you deposited. It only means that if you want to remove more than the percentage that the bank keeps on hand, such as the entire balance from your account, the bank will need to access funds from somewhere else to give you your balance. Your money is growing at 1% in the bank, while the prices of goods and services keep getting higher to almost 5%. This affects the buying power of your money drastically. My question is, who's profiting out of your hard-earned money? Do you ever sit and think about this? I know that you, my bosses, are wise. Think about this. They give you less than 1% and they turn around and profit 2 to 20% from the same money that belongs to you. It's time to think about these things. Meanwhile, if you have a checking account and you overdraw it, they will charge you at least $30 in overdraft fees. Also, if for some reason you withdraw money from an ATM of another bank, they will charge you ATM fees at an average of $3. The banks will charge you wire transfer fees as well, on top of monthly maintenance service fees. Here are my recommendations. Some banks don't charge maintenance fees on the checking accounts. Shop around for such banks and open a checking account there. Your checking account is necessary, but use it as an operating account, not a place to keep your money. Just keep enough money there to pay your bills. If you have more than bill money in the checking account, guess what you're doing? You are making the banks rich. You should also shop for savings accounts where you can have some interest, even if it's minimal. Use your savings account for keeping your emergency funds. You don't want your emergency fund in the house where you can easily use it or lose it. You want it safe, but in a place where you can quickly get it in the times of emergencies. Have you learned anything from this video? If so, please leave me a comment, like and share this video. And if you are not subscribed, please do so. Thank you so much for watching.